I got this great question that I know a lot of other people are probably asking as well. I'm not saying Bitcoin's price won't go up, but you are not giving us any arguments as to why it will. Why look at 25% adoption and not 2.5% adoption or even 0.0025% adoption? Your argument is basically if demand goes up, price will go up, but you don't have any answer to why demand would go up. I really like this question because it goes really deep into the first principles of how things work and why people will want a form of money that nobody can create out of thin air. The first thing that I want to mention here is just the returns from Bitcoin versus all these other assets. So Bitcoin, gold, and the S&P 500. Bitcoin has returned 132%, gold has returned 37% in the last year, the S&P 500 has returned 22%. In the last 2 years, Bitcoin has a compound annual growth rate, so year over year, it's returned 107% compounded. Gold has returned 23%. The S&P 500 has returned 21%. If we go all the way to 4 years, this is the worst period. Keep that in mind. So this is the worst period out of all of these. 28% for Bitcoin, 11% per year for gold, and 12% per year for the S&P 500. The reason why I wanted you to look at those numbers is because I want you to think from the perspective of an investor, somebody who's trying to save for their future. So we can see here from Wells Fargo, great answer. Why is investing important? Investing can be an effective way to put your money to work and potentially build wealth. Smart investing may allow your money to outpace inflation and increase in value. The greater growth potential of investing is primarily due to the power of compounding and the risk return trade off. And the reason why investing is so important is because the purchasing power of the dollar is constantly decreasing. This is the purchasing power of the consumer dollar in the US city average. So we can see here, this is a chart from the Federal Reserve. They've created a chart here explaining to you that the value of the dollars that you save is constantly decreasing. So you're able to buy fewer and fewer things with every single dollar that you have. And the longer that you save your dollars, the fewer things that you'll be able to buy with those dollars. And again, it goes back to supply and demand. The dollar can be created out of nothing. We have basically pieces of cotton. So we have $100 here, $100 bill here. So we have pieces of cotton that we use to exchange for goods and services. These things can be printed out of nothing. They have printers that create more. They have databases where they just add a line to a Excel spreadsheet and they create more dollars, whatever their way of doing it in the background is. So what's happening is they're adding more and more dollars to the economy, and you're able to buy fewer and fewer things with your dollars as they print more, because as more dollars enter the economy, the demand for dollars is fulfilled. Fewer people want dollars, and they want more dollars for the goods and services that they're selling. So let's say you go to a grocery store. You want to buy apples? A few years ago, maybe you could buy 10 apples for $1. Today, you can buy 1 apple for $1. A few years ago, you could buy a house for $100,000. Today, you're paying $500,000 for a house, because the number of dollars in the system keeps increasing and increasing and increasing. And on this chart here, you see the complete opposite. So instead of showing you the purchasing power of the dollar, now we're looking at the supply of the dollar. This is the M2 money supply. We can see here in January of 1959, there were $286.6 billion in the system. Today, well, in December of 2024, there were $21.5 trillion in the system. So this number has gone up by about 8% per year. So if we take a look at the chart where it showed you the returns from these assets, if the amount of money in the system is increasing by 8% per year, gold is giving you 13% returns, 12%, 11%. In the last 4 years, it's only given you 11%. So you've made, let's say, 3% more than the money supply. With stocks, in the last 4 years, you've made 4% more than the money supply is increasing. So you're outpacing inflation very slightly. These two, gold and the S&P 500, are a way for you to retire in 40 years. If you want to retire in 40 years, go ahead and buy gold and the S&P 500. Go for it. If that's what you want to do, if you want to keep waiting to retire, If you want to wait until you have free time in your life, if you want to keep working a job that you hate, if you want to keep struggling financially, having to pinch every single penny that you earn, keep investing in gold, the S&P 500, keep holding dollars. But if you want to retire early, if you want to actually get out of the financial system that we have, this rat race, you have to buy Bitcoin. We can see that from the returns. The lowest return in the lowest compound annual growth rate in the last 15 years, the lowest period was 4 years ago. And in that period, it's up 28% per year. This price is more like a downstream effect of Bitcoin, I'd say. I think a lot of people who are not even studying Bitcoin, who don't quite understand it, they're probably going to buy Bitcoin just because the price is going up. I think Wall Street is going to buy Bitcoin because of the fundamentals. I think Wall Street is going to buy as much as they can because they understand that Bitcoin could potentially compete with the US dollar. They understand that because Bitcoin has a finite supply, eventually it will be money. Right now, it's in the store of value phase. As more people discover Bitcoin, they're going to want to hold it. They're going to want to take part in these massive returns. And eventually, those people who want to take part in these massive returns are going to want to sell their Bitcoin in exchange for goods and services. So maybe they'll want to trade it for groceries. Maybe they'll want to trade it for a house. Maybe they'll want to trade it for furniture, a car, whatever they want to buy. Maybe they'll be willing to give away their Bitcoin in exchange for those goods and services at some point in the future. The fundamental reason for why Bitcoin's price is going up is because it has a finite supply. There's only ever going to be 21 million Bitcoin. Once 21 million Bitcoin have been issued, there's never, ever going to be any more. The network is going to be sustained through transaction fees. Whoever owns Bitcoin will be able to do whatever they want with it. They'll be able to exchange it for goods and services. Maybe they'll pay you Bitcoin if they start a business. They'll pay you in Bitcoin. You'll do whatever they want you to do. They need some kind of computer programmer, whatever the jobs are at the time, 2140, whatever the jobs are then. If this person has Bitcoin, they can pay you for your labor. They can pay you for your time. Bitcoin is a way for people to save their time for the future. So they can buy other people's time using Bitcoin because Bitcoin is money. It's almost like a self-fulfilling prophecy where people see that Bitcoin's price is going up, so they want to buy more. And because there's a finite supply, the number of people who are willing to sell Bitcoin run out at every single price. So the people who have Bitcoin and they're willing to sell at, let's say, $80,000, they're gone. No more Bitcoin available at that price. Over time, because there's a finite number of Bitcoin, the people who own Bitcoin are also finite. The people who own Bitcoin have a finite number of Bitcoin as well. So they can sell their Bitcoin into the market, but demand is infinite. Everybody in the world has a demand for money. Bitcoin is essentially money. It can replace whatever we need to invest. So if Bitcoin is getting you 40, 50, 60% per year, you're massively outpacing inflation. And why wouldn't anybody want this? Why wouldn't anybody want to increase their purchasing power for the future? I think that's the main thing here. Why wouldn't anyone want more purchasing power going forward to buy more of the things that they need, the things that they want in their life? Whatever they want to purchase, they'll be able to purchase it with this Bitcoin. And of course, I've mentioned this in previous videos. The reason why people want Bitcoin is because it fulfills all of the functions of money. Most people haven't figured this out yet. The people who have figured it out are trying to buy as much Bitcoin as they can because they realize that at some point, you're no longer going to be able to give away dollars to purchase Bitcoin. You're going to have to work for Bitcoin. You're going to have to give away goods and services for Bitcoin. So you may be able to eventually sell your house for Bitcoin. Instead of getting dollars, you'll be able to sell it for Bitcoin. Bitcoin is better at all of these characteristics than gold. Today, gold is the most widely used store of value because it has all of these characteristics, but they're not the best. It's not the best at being money, so you really can't use it as a medium of exchange and a unit of account. But Bitcoin, you can. So the game theory here is who will figure this out first. Whoever figures this out is going to try to accumulate as much as they can. Once Bitcoin is in the hands of people who figure it out, they're never going to sell it again. So right now, a lot of people hold gold as a store of value. I personally think because Bitcoin's inflation rate, so right now Bitcoin's inflation rate is 3.22% for the next 4 years. So it's about 0.75% per year. This is lower than gold. The reason why people use gold as a store of value is because historically gold has had one of the lowest inflation rates out of everything that we use. Gold is also distributed pretty well throughout the world. People from all around the world have it. But gold doesn't fulfill all of the characteristics that we need money to have. A lot of people just hold on to it because they expect that the purchasing power will rise over time. Bitcoin is digital gold. It has all of the characteristics of gold, but it's better. If gold currently has a $19 trillion market cap, where do you think Bitcoin is going to go? Right now, gold is only being used as a store of value. Gold can't be used as a medium of exchange and unit of account in the digital economy because you can't move gold over the internet. Bitcoin is the only thing in the world that has a finite supply. It's decentralized like gold. It can be used as money. You can transfer it across the world if you want to within seconds, within minutes. You can use the Lightning Network to transact even faster. Nobody can stop you from transacting. You are in control of your wealth, similar to gold. So right now, gold is worth $19 trillion. We now have a digital version of gold. So more people will have access to it. Most people don't have access to gold. You can't buy a gram of gold. A gram of gold will cost you something like $70, $80. Because Bitcoin is digital and because it's infinitely divisible, you can buy any amount of Bitcoin that you want. If you want to buy $5 worth of Bitcoin, you can. If you want to buy $10 worth of Bitcoin, you can. So what this does is it makes Bitcoin available to more people around the world. One of the problems with gold is that you can't buy really, really small amounts. So for example, I pulled up some sales for 1 gram of gold. You can buy 1 gram of gold, but it'll cost you way more than 1 gram of gold is worth. Right now, an ounce of gold is worth $2,800, so 1 gram is worth about $100 US. You can see here, Royal Canadian Mint is selling you 1 gram of gold for 170 Canadian dollars. 170 Canadian dollars works out to be 117 US dollars. So 1 gram of gold is actually worth $100. You're paying 117. On top of this, you have to also pay $30 in shipping. So you're paying, let's say, 135. So the price of gold has to rise 35% just for you to break even. What this means is that you can't buy small amounts of gold and expect it to be a way for you to store value over time. You can't really dollar cost average into gold. Maybe you can put away $100, $200, $300 a week, whatever you can put away, but you have to buy ounces. You can't buy in small amounts because you're going to give away so much in slippage. So in this case, you've paid so much in just admin fees and the spreads and your shipping cost that you've increased your cost basis from $100 that it's worth by 35%. So you need to make 35% in profits for you to actually make this worth anything. On the other hand, if you wanted to buy Bitcoin, you have to pay a 1% spread. And then the fees on the network for you to transfer your Bitcoin to your own wallet, 1 sat per VByte, so something like 15 cents now. So instead of paying $30 in delivery, you're paying 15 cents. Instead of paying a 15% spread, you're paying 1%. So what that does is it makes it more available. It makes Bitcoin more available to more people around the world. More people can buy Bitcoin, demand rises. Bitcoin is massively outperforming everything else, like I showed you here. So again, demand rises. As demand rises, Bitcoin's return accelerates. As institutional investors start joining in, Bitcoin's return accelerates even more. As institutional investors start joining in, they're going to start buying tens, hundreds, thousands of Bitcoin every single day. Demand rises even more and more wealth going into Bitcoin. We're going to see this accelerate. We're going to see these two slow down, gold and S&P 500. We're going to see them slow down because people are going to go from gold to Bitcoin. People are going to go from the S&P 500 to Bitcoin. So the reason why the price is going to go up is because people need a vehicle to invest in. Bitcoin is the best vehicle for the entire world. Nobody can create more. Nobody can increase the supply past this 21 million cutoff. Every Bitcoin that's created requires a certain amount of time, energy, effort to create. Nobody can change this. Nobody can stop this from happening. Nobody can stop you from spending your Bitcoin however you want to. So Bitcoin is a neutral form of money, meaning that anybody in the world can participate in this network. Anybody in the world can get exposure to this network. So more and more people will be able to get access to Bitcoin. We're going to realize that Bitcoin is the best form of money in the world. We're going to see merchants who want Bitcoin in exchange for their goods and services instead of dollars. Over time, this is going to get widely adopted. In this case, it's not about if, it's about when. It's about when it gets adopted, not if. Every single person on earth is going to have to adopt Bitcoin. Eventually, they will. Once people realize that this is the best form of money, they're going to adopt Bitcoin. There's no way around that. It's not about if, it's about when. In this case, it could take a year, it could take 10 years, 20 years, 50 years. I don't know how long it'll take. In the meantime, while people are still figuring it out, the price is going to keep rising. It's going to keep rising. It's going to go to $1 million, 10 million, $100 million because the people who figure it out are buying and they're not selling again. They don't plan to sell again. They plan to hold until Bitcoin starts being used for what it's supposed to be used. My argument here is that eventually everybody in the world is going to use Bitcoin. Everybody in the world is going to use Bitcoin as a store of value, medium of exchange, and unit of account. I just don't know when. So as more people adopt Bitcoin, the price is going to be pushed up. This is not something we can avoid. Don't focus on the day-to-day prices. Day-to-day, the price is going to fluctuate. We're going to see it go up, come down, go up, come down. Year over year, your goal should be to have more Satoshis. Doesn't matter how many Satoshis you have. You have 1,000 Satoshis, get to 10,000. You have 10,000, get to 100,000. You have 100,000, get to 1,000,000. Whatever you have, accumulate more. Save for your family, save for your friends, save for the people around you, save for your community. There's only a finite number of Bitcoin. Your entire community is going to need Bitcoin in order to pay for goods and services. If you can accumulate enough, contribute to your community, why not? Make your community better. Make it a better place for your kids, for your grandkids, for generations that aren't even born yet. Because Bitcoin has all of the characteristics we need money to have, it's going to eventually replace gold as a store of value. It's eventually going to replace the stock market as a store of value. People aren't going to blindly put their money into all of those legacy assets anymore. They're going to divert their money into Bitcoin, or they're going to get paid directly in Bitcoin. When they get paid in Bitcoin, they're no longer going to have to buy those other assets. Those other assets are not going to outperform Bitcoin unless there's a massive change in how we value them. I personally think that right now, everything is overvalued. I think houses are overvalued. I think gold is overvalued. I think stocks are overvalued. I think Apple stock is overvalued. Everything is overvalued when priced in Bitcoin. As more dollars are added to the system and more dollars chase Bitcoin, we're going to see that Bitcoin's price is going to rise until nobody's willing to sell their Bitcoin for dollars anymore. And the only way to acquire Bitcoin will be through either labor or through offering some kind of good or service.